Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great Friday. So the dollar continues to weaken. We have the euro near its highs of the session. Dollar Mexican peso continues to push this support. That's why this alert's going off. This is that's big support zone. It was the lows from yesterday. We're hitting new lows, but intraday relative strength is pretty oversold. You just got to keep in mind this is all pretty big support. I guess while we're here, yesterday in the chat room, a couple guys were trying to pick up the dollar Mexican peso on the long side. Hopefully they got out. I said, hey, as long as we're below 20, you got to expect that that it's going to trade heavy. I mean, let's not ignore the fact that a central bank did make a move. Whether you believe it or not, it's one of those, and whether you believe it's going to make a difference, or that the market might have been caught off guard. Regardless, where'd my glasses go? Sorry. Regardless, it was a central bank that did make a move on interest rates. So, as I mentioned last night, as long as we remain below 20, I think it's going to trade heavy. And matter of fact, we didn't even lift it above 1990. So the good news is that we know where that, where the break point is. If you're looking for longs, like, I wouldn't mind buying the dollar Mexican peso again. I just, I'm worried that stocks are so strong. I mean, that's my biggest problem at the moment is we are going into month end. Right? Month end. Unless something crazy happens between now and month end, or now and next Wednesday, if you're in the stock market, is there any way you want to sell right now? And I mean, unless something crazy happens going into the next week, like, let's say cryptos fall through the floor because there's some regulation being pushed through or something like that, we got to get past month end, man. And I'll tell you, anybody who's short equities from last week got squeezed out, right? And you got other people that are like, well, I'm going to continue to be long because it is month end. So, with that being said, you have to imagine that, and I might as well just stop here and just do a couple of things. You have to imagine that, while we're below 1990, it's hard to be bullish the dollar Mexican peso. Now, that doesn't mean that we won't hold support. I mean, look, the dollar Mexican peso has staved off moves below key support. And matter of fact, I should write this. It's 1955, guys. It's staved off moves below, key support many a times as stocks have hit new highs, but I doubt we're going to break higher unless stocks suddenly reverse for whatever reason. So speaking of which, since we're looking at the S&P, let's just do this. Bullish. You guys know where the numbers are. 4,300, 4,260, right? I don't think I have to get too crazy here. 4,260 is right here. So, this would take us below the breakout point. So below the lows where we're at right now, or the lows at 46 or 4,267, we'd have to break back below 4,260 for us to actually think that, we're going to reverse course. Bull flag pattern points to 4,300. 4,300, let's not ignore the fact that 43, shoot, I didn't mean to do that. 4,300 is the 127% extension of this move lower. It's also the 127% extension of that move lower. So this move and that move, what is this here? This is a mess. Why is that there? Oh, that's much cleaner. Okay. 127% extension, 127% extension. They both come at 4,300. Let's just close our eyes and target that. Sound good? I mean, that's what we should be doing. Just close your eyes, hold your nose, just wait. Okay. Yeah. So now the euro dollar. Euro dollar is going to come back up to, I want to see, as a matter of fact, let me go ahead and do this. $19.85 on the euro. And while we're below 120, I'm still bearish, guys. So just, I mean, all this is going to turn into is something like this, right? I remember that. Let's get rid of. Oh, I'm sorry. This right here. Let's get rid of that. We don't need that for right now. 1995 is the 50% retracement. So that looks actually doable. Actually, so let me write down the 19. Well, let's just write down 120. That's right. Well, I mean, that's it. 120 is going to be key. That's key. Support right now is going to be whatever these lows are. See all those lows we can't break below? That's 119.20. That's support. Okay. John says, forget about that 870 on the NOK. Yeah, you know what? I was just reading. Hold on. Let's see. I was just reading this from JP Morgan. Let me show you this. Scandinavian currencies continue to trade well post-Fed volatility, but have once again become slow-paced and set well within familiar ranges. Client interest has been very light. I believe positions were reduced at the end of last week, and I don't see much appetite to re-engage with as much confidence as the market calms. Having said that, we did see some real money buying of Norway yesterday for the first time this week. I remain lightly positioned in this space and don't feel a need to rush in, just so you can read that. So what that's telling you, what it's telling me from JP Morgan, I've been reading JP Morgan analysis for a long time. Markets were caught short. Institutional money was caught short here, right? They reduced their, or let me take that back. They were long Norway. They reduced their positions through here, probably stopped out a lot of people and profits, right? And he's like, I'm not seeing a lot of interest for people trying to buy Norway again at these levels, but there was some yesterday, and which is driving us down here. So I would think that we might see 841 first, then, you know, and when I was talking to my buddy this morning, he's like, yeah, I think we just need to get past month end. And I'm like, yeah, I 100% agree with that. So John, did you hear me? He said yes. Okay. That was me that sent the dollar Mexican chart on Twitter. You know what? Let me tell you something about Twitter. Do you know how much time I spend on Twitter? Take a guess how much time I spend on Twitter, looking at Twitter. Take a guess. Percentage-wise of my day. Less than 1%. And when somebody tweets to me, I very rarely see it. Very rarely. What I do is I tweet something and then I leave it. And then I don't. So if you like people like tweet to me all the time, and I'm like, I have no idea. I never even saw that. And it's not because I'm ignoring people. I just have no idea. Like, huh? Because I'm trying to watch price action everywhere else, send out alerts, be in the chat room, you know, be on calls, talk to people, do interview, you know. So yeah, I mean, Twitter is like, unless the market starts moving and I have to go look at Twitter to find out what the hell just happened that I missed. I very rarely spend any time on Twitter. And there are a few people that I actually look at like, okay, hey, what's so-and-so saying, you know? Other than that, I don't know. It's you know, not super important to me. And it's one of those, like I said, unless I put out something controversial, like if I tweet something and I'm like, oh man, this is going to get a lot of people's attention, then I might have my attention a little bit more. But yeah, typically I don't. And so the reason why I'm pointing that out, John, is if you ever tweet to me, like I'll have to go back a little bit later today and go take a look. If you ever tweet to me and I ignore you, it's not because I'm like, oh man, what a douchebag. It's like, no, I'm actually just not paying attention at all. Tony says, yeah, the contra feed is really the only thing you need to check. That's it. I actually have, so I have desktop notifications, like, and Twitter notifications too, guys. And Carl said you need to get your Disney doppelganger to do it. Yeah, you know, like I spend all my time in the chat room, you know, in our chat room. So when everybody in the chat room knows that there's a contra that I follow really closely. He's a guy on Twitter. He doesn't know who he is, but man, as soon as he tweets something, you know it's the top or you know it's the bottom, and he's really good at it. Like sometimes I think it's you know, like Benedict in the chat room thinks that he's really like works for a big fund. Actually, you know what? We need to clear 850, this previous support, which would be 852. Since we're looking at it, I'm just putting it on there. I'm just doing analysis as I talk, because it's Friday anyway. So, and I, by the way, I still think this is bullish. That we've remember, don't forget, guys, the Norway, we've come out that this did you see how long we consolidated for before we broke? That was 2 months of basing. And matter of fact, Benedict said, hey Blake, this looks like a cup and handle, or we were talking about something else. And by the way, it is, just so you guys know, this is cup and handle, longer term. So, you know, as long as we stay above 840, I'm not really worried about it. You know, we break above this, and then you got to move that looks like, you know, like somewhere like that. It ain't gonna happen today. Just letting you guys know, but it's something that I'm keeping an eye on. That's a big cup and handle pattern, big basing pattern. Love basing patterns, probably more than anything. You know, because I mean, think about all the people that have been short in the U.S. dollar, Norwegian krona, and they've just been like, out of God's, you know, what? You know, and remember Norway and like the SEK, the Swedish crown, the Norwegian crown, even the DKK, the Danish crown, even those are all institutional money players. They're not you and I, guys. You know, very few retail traders trade Norway, you know. It's all institutional money. They park their money there. They're like, dude, let's just buy some Norway. Let's sit on it for a while and blah, 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 blah. You know, these guys get squeezed out. That's when things really start to move. Obviously, you can see that happen. You can see that happen. You can see that happen here, right? This is like, oh my God, everybody's parked long Norway and the market just squeezed the crap out of everybody, right? That's all that is, you know. And look, the problem with Norway right now is we're finding the same situation. You got everybody parked long NOK right now. All we need is a little risk off event, which I'm not saying is coming today. I'm just saying, you know, we get a little risk off event, it's going to trigger some pretty big moves through here. So we break 870. Oh yeah, we're going, you know, much higher in my opinion. And coming out of a wedge, looks like a head, looks like a cup and handle, blah, 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 blah. You guys got it. Okay. Don't need to harp on that. Anyway, I don't know why what I was telling you guys about. Oh, well, I guess going back to the whole Twitter thing, I do enjoy Twitter. I like to gauge it for sentiment. A lot of times, just so you guys know, I have enough of a sampling of retail traders. I've been doing this for so long, you know, on Twitter. I've been on Twitter for what, 11 years, 13 years. and I don't, I'm not one of those guys like, when you tweet, just so you know, I'm going to give you a good example here. Well, I'm not going to give you a good example, you guys, because I don't want to talk bad about anybody. You'll know who they are. You find a trader that you follow on Twitter. As soon as they tweet something, they get 5 or 10 likes immediately. Do you know what that means? And some of them, will get like 20 or 30. Do you know what that means? Does anybody know what that means? If you guys use Twitter, do you guys know what that means? Carl, they're bots. Yeah, they're algos. Somebody's paying for that, right? I know some guys that are quote unquote really popular that they just pay for that stuff. Go read the replies. Go read you're like, oh my God, look at all those people reply to this stuff and blah, blah, blah. It's all bots, right? And then you get some real people chatting in between because they're like, I want to jump in the conversation and I got something to say about that. It really is. And some of them are very high end bots too. So, and Georgie, you're asking, what is the Twitter handle on the Contra Dude? Let me just go ahead and make this clear. Oh, shoot, I hate it when I do that. Damn it. No one in the chat room is going to tell you indirectly or directly. Sorry. Well, maybe Craig will. Craig's done it. He might tell you. But I'm going to go. Last point I want to make on Twitter. One of the things that I love to use Twitter for myself and for you guys too, is obviously just being able to gauge sentiment. Because, shoot, where's the? Here it is. Gauging sentiment. The reason why I like to gauge sentiment is because I've been, like I said, I've been using Twitter long enough, and I've got retail customers that are retail traders that follow me, and they're all real. No, I've never paid for anything, or it's look how many tweets I've got versus how many followers I have. That's and I know I put out some good stuff from time to time. Not all the time, but from time to time. So I know that my Twitter followers are all just real followers, right? Now a lot of them have dropped off and stuff, but I think it's a good gauge when I like a lot of times I'll tweet something like this. Looking to go long the euro dollar break on 120. Like I might tweet that. And if I get a bunch of people saying or liking that, like, oh yeah, that break's gonna be huge, get a lot of thumbs ups, right? Then I know that the retail market's positioned on the long side, so then I might short. Does that make sense? So anyway, that's what I use Twitter for a lot of times. I throw stuff out there to look for the reaction. If I look for the reaction, I can kind of gauge what the market's thinking. I hope that makes sense. All right, I'm going to buzz through this analysis. The market's slow. Stocks are going higher. Volatility's low. Look at the VIX. Nothing's going to happen. Well, nothing good happens. Well, actually, let me rephrase that. Nothing good happens in volatility on above 20. That means if we're above 20, usually stocks are under pressure. But below 20, yeah, stocks are going up. Volatility is low. Blah blah blah. Okay, so we are holding in the cable right now. We are holding support, which is 38.90. I actually think this is bearish. There was a big rejection at 140 this week. Intraday resistance is at 139.50 and then 140. We could make it up to 139.50 today. Look, the S&P's, oh my God, what happened there? Do you guys see copper? Copper is crapping the bed. let's see here. Anyway, the Aussie dollar, since copper's selling off, we are up against the 618 retracement. Okay. Remember, we've come out of a triangle. It is bearish. I know we've had a false breakdown thus far. I get that. But I think that this consolidation, let's think about time here. All right. Time. It's all about the time. Oh, shoot. Okay. All about the time. We consolidated for 159 days. That's basically the first half of the year. And then we broke down. So we consolidated for like 5 months and then we broke. I'm not convinced that this move is over yet. Now we get back above like 76, 77 cents. I'll be like, oh, for Christ's sake, you know, here we go. We're just gonna false breakdown. Then you have to start looking at it like, oh, you know, oh, that was just a flag. I don't know. I mean, you know, we start getting above 77 cents and it's really going to start to squeeze. But I think for right now, we have to, you know, just keep in mind that, look, stocks are hitting all-time highs and the Aussie can't even get out of its own way. That's a fact for now, right? All-time highs in the S&P and the Aussie is still, let's not ignore the fact that the Aussie is still 5%, which is a huge currency move. It's still 5% off the highs, right? So I'm not convinced about this Aussie. I'm really not. Yes, it's drifting higher because stocks are hitting all-time highs. You'd expect it. So 76 and a quarter. Write that down yesterday. 76 and a quarter. We did. So 76 and a quarter. If you guys have been looking or watching my analysis long enough, try watching it for 15 years, 20 years. My analysis doesn't change. So it's the same. Like you can ask Rick in our chat room. He's been watching me for 15 years. Some of the guys in there for, you know, when Ron comes back from Hawaii off his vacation, he'll tell you, you know, last 15 years, yeah, it's just the same crap. You know, I don't do anything out of the ordinary, nor do I do anything. I'm not going to, you know, throw you guys for a loop and try to teach you a new way to look at an oscillator or, you know, whatever either. Because I know this all works. You just have to find your specific points based on, you know, the analysis, the basic analysis you do. Just look for some confluence. Support here at 75.60. The Kiwi is acting a little bit better. You can see the trajectory of the Kiwi versus the Aussie, right? Look at the difference between the moves here. The Kiwi trajectory is much stronger, which, you know, it obviously makes sense. Look at the Aussie New Zealand continues to drift lower. I mean, that's why. But that means that the Kiwi can still reach for the 70. This is 71 cents, obviously, this blue line, but we can reach all the way for 71.20. I'm going to write them both. And I'm not as convinced about the downside in the Kiwi as I am with the Aussie, because the Kiwi actually didn't, or did we? I guess we hit brief new lows, but this is basically a matched low. I'm not going to count it as like it's a low, you know, YOLO. 70.50 is intraday support. I mean, you know, we could actually go all the way down to 70.30, but so I'm just looking at your comments. John, don't worry. I'll go back and look at that. I'll go back and look at your chart, your peso chart. I have to just go back and I have to look. I'll find some time this morning. I got this presentation for Boris Schlossberg tomorrow, early in the morning, really early in the morning. I love getting up at 4 o'clock in the morning on Saturdays. It's always like super fun, but I'm going to do that tomorrow. If you guys are around, and it's actually, a lot of it is based on what we're doing right at this moment in time. You know, it's looking for confluence and why do we do it? So maybe a better explanation of this. Okay. And then it all just comes down to execution. It really does. 122.50, 123.40. So, like, I'll give you a perfect example. Like, I have there, and I'm not going to use names because you guys know I don't do that. Somebody that worked for us, you know, years ago, I quickly found out couldn't trade herself out of it, or couldn't really trade. Okay. And did great analysis, but, you know, I made a recommendation to the guys that I traded for, and I would never do that again because they are great analysts, but they just couldn't trade. Like, they could not trade. Like in the best trading environment in the world, can't trade, couldn't make money. And I'm like, oh, you know. So, you know, it's all about execution. It's all Tony said, analogy you're looking for, trade themselves out of a wet paper bag. Correct. 91.50 is support here. Look at this pennant, right? 91.80. I mean, I sat there for like 6 months going, oh my God, how is this person not making money right now? I mean, you know, I understand when markets are hard. They've been, I mean, we've had a, especially in currencies. Oh my God, you know, the last 2 years have been brutal. Volatility has been low. It's just like, oh, we have to deal with stocks going straight up. So it's like, I guess we're never going to get a turnaround type of thing. But man, when you got volatility, holy cow, you know, it's pretty jaw dropping. You know, that's when you realize it is all about execution. And that's why it becomes extra important during periods like this that are of very low volatility, that you have to be really precise, right? So resistance right here is for 92 cents. Support is going to be 91.40. You know what? I need to go deeper than that. I'm sorry. We're going to have to go 91 cents just because we are there. So I'm going to write down. I still think the Swissy is bullish. Matter of fact, if you guys didn't read, here's Grega's analysis on the Swissy this morning. Okay. Just FYI. Norway. We can come down to, oh, I already did it. Dollar Mex. Dollar Mex is heavy. I mean, we already talked about that. Dollar Yen. Now, what I would love more than anything right now, since I'm still short some Canadian yen, I'm still short some Euro yen, just small. I got taken out of my Euro yen. I thought I'd nibble a little bit, but they're just not. I want to see that, like, all the whole yen complex roll over, but it's just kind of like sticking a little bit of little bit of my nose out there, see what happens. I think yields need to fall because obviously if you look at the dollar yen, 4-hour chart, you look at yields. I mean, this is what's driving us at the moment, or this is the 4-hour chart, but you can see it's like we're stuck. Dollar yen, I don't think is going to move much without some help with yields. But we did hit the 127% extension. So channel support probably will come back into play. Probably is going to take us till we get down here. It'll be 110 by the time we get down there. So, I mean, for today, I guess support will be 110.50, then 110. I'll just do that. 10. Resistance 111.15. Steven Stelios, you notice how I've dragged out today a long time.
You did.
Sorry, I didn't mean to do that. I looked at the clock, and I think it's because it's Friday and I'm tired. And
nothing to be sorry about.
You know what I got wrapped into today?
Is it something kinky?
No.
That's about to come out of your mouth.
No, my neighbor, is his birthday, right? It was his birthday, and he's like, the guy does not mind heat. Like, it could be 130 degrees out, like, the hottest temperature in Dubai that you could think of. And he's like, well, let's go ride a bike. He's that kind of guy, right?
No,
and
thank you.
But that's the kind of guy he is. And
yeah.
It was his birthday, and he's like, I want to play golf. And I'm like, dude, it's like 120 degrees out. And he's like, I want to play golf. I'm like,
at 4 a.m. you can play golf.
No, at 1 o'clock in the afternoon, the hottest time of the day.
No way.
And because usually I'm like, okay, if I'm gonna play, I'll play at we get out there literally at daylight, which is at 5 o'clock in the morning, and then whatever. Anyway, he's like, I want to play golf, and you guys are gonna play with me. And I'm like, okay.
I would be like, I love you, dude, but find somebody else.
Yeah, and so there's a foursome today, and everybody got caught up with meetings, and I'm like, guys, I can't go that early anyway. And he's like, fine, I'll make the tea time, 1 o'clock in the afternoon. Yep. Yeah, I'm going to die today out there. Seriously. And I'm like sitting here dragging out my analysis because I keep thinking about how nice it is sitting at my desk right now, not being outside playing golf. And I love to play golf. I do. But man, it's going to be brutal out. So we already talked about that. Let's talk about gold and silver. And so, and Bitcoin, I guess. I don't have to actually go too deep into Bitcoin. We all know. This came out of the pennant, obviously.
It has.
So 36.6 is really important now. Or 36, what did I say? 36,500. And then obviously 42,500. This is bearish. That was the 618 retracement. That's what it was, right? And so now that 30,000 may come back into view. It's obviously very important. We'll look at gold and silver. Silver trying to pop its head out, but you know what? This is probably looks something like this, I would assume. I still think while we're below 2650, 2550 looks at risk. Oh shoot, I wrote it the wrong place. 26. Sorry. It is Friday. I'm a little tired. Dollar Canadian.
Makes sense.
Yeah, damn dollar Canadian. What's that?
Makes sense that you're tired.
Okay. I know. Oh, so, and then last night, I watched a movie with my kids, or my youngest son, my oldest son, is traveling to his friend's house in Minnesota. He's out there. He's been out there for the week. So we watched a movie last night. Have you guys ever seen $1 Million Baby?
Yes.
Yeah, it's a great
Yes.
movie. I haven't seen it in, since it came out, actually. I think I saw it in the theaters.
Same
I mean,
here. I only saw it in the theaters when it came out.
yeah, and I knew I know what it's about. I forgot the ending. And I forgot how good
Really?
it was.
That's the only part. It's not easy to forget.
Yeah. No, that's. I mean, I haven't seen whatever it came out in 2004. I mean, that's 17 years ago.
Ah, shit! I'm
So
growing really old.
Yeah.
Is it so many years ago?
Yeah.
Okay.
So this support right here is 1773. Okay. I'm going to write down 1770. Obviously below 1755, then things get kind of ugly. I doubt we're going to break that. With month end coming up, but this is a pennant, guys. I mean, it's a pennant right now, and we are actually we keep challenging the upper end of the pennant. At some point, the market's going to get fed up trying to buy this. I'm going to tell you, I was talking to a guy last week who bought that dip below 1845 with a big size. He bought it below 1845. As it dropped below the 200-day post FOMC and it's still in the trade. He's like, man, it's got to bounce back to 1800. I'm like, I hope it does for you. But I'm trying to think like people like that have size that are like, man, I have not seen an exit yet.
The only thing I would comment is that after the Fed, a lot of things moved. Everything pretty much came back. Yields came back. The dollar's coming back. And the only thing that's not coming back is gold and silver. So, why are they lagging? Why are they lagging?
Why are they lagging, or do they play a little catch up?
Yeah.
But look, I also look at the dollar, and I still believe this is all corrective. And I know Steve's looking at the same thing.
Yep, it looks like
the dollar index may drop down to this 50% retracement here. Just like see this breakout point right here. I mean, we may drop just a little bit below that, but there's still a 50% retracement of that move. It's also a 38% retracement of the entire move. As long as we can continue to hold these levels in the dollar index, I look at gold and I'm like, shoot, that might be the next shoe to drop here. I don't know, but just my thoughts. And obviously above 1800, and then you got to change your tune, right? So there you go. Or I have to change my tune. All right, guys. Have a great
1 second. Let me copy that.
Yep.
Let me screenshot it. There
You
we
see,
go.
he's slacking.
Yes.
I got to go finish up my my PowerPoint for tomorrow morning for the Trader Fest. It's not going to be very long. Each presentation, I mean, I literally have 45 minutes, and we're going to spend the first 10 minutes just talking about like ForexAnalytix and kind of what we do and that type of thing. I've got like 15 minutes for a presentation, then 15 minutes answering questions between him and the attendees, and then I'm out. It's like super fast. Anyway, I got to go wrap up my presentation. But if you guys, one of the things I always have to say about these presentations that we do, especially when you're being interviewed by somebody, is they're going to ask questions that not everybody else asks. So I like listening to those. Like if I follow somebody pretty closely, I like to listen to different interviews from different people because they ask questions that other interviewers are not thinking of all the time. So anyway, just some food for thought. All right, guys, I'm gonna see you guys later. I'll see you guys in the chat room. Thanks, everybody.
Thanks,
Steve and
Blake.
Stelios, it's all yours.
Thank you, mate.
And
Thanks,
pretend your back hurts and just walk around on the golf course. Even walking around at that time is going to be difficult.
Yeah, actually, I mean, just by hearing what he's about to do, I got myself sunburn.
Yeah. Okay. So the markets are open. The yields are going a little bit higher, but really we're still at 150 in 10-year US. So I don't think it's anybody's going to worry about that. And as a result, I don't think equities are
Non-event,
going to
mate.
be. Yeah,
Look at the yields still stuck.
Exactly, and I don't think equities are going to be doing anything. Obviously, they can correct a little bit here and there, but really, in the for a more decent move, I don't think it's going to happen unless yields move.
Yep.
Cryptos are, up 5% one day, down 5% one day, and
because they're stores of value.
Stores of value. They're still consolidating. Like Bitcoin is still within that flag. I did intraday.
I'm sorry, guys. Did you guys just see the sell-off in the Nasdaq 100?
Just
Dude,
now, let me see.
Falling pretty quick. Like what's driving it? I don't know what the.
Oh yeah. I'll tell you what's driving it. This ascending wedge trend line resistance is driving it.
Yeah, well, but Amazon's down 1%. So just thought I'd point that out, guys. Okay, see ya.
Okay.
Thank you. Yeah, so Bitcoin, I think, is still within the that flag. Intraday we broke out of it, but we didn't close out of it, so it's still playing. And the corrective move, that move we're seeing, I still think is corrective.
Ethereum still looks much heavier than Bitcoin.
Yes.
And probably some kind of a little pennant, which probably we've already broken below from, there it is. Yeah, so I think it's extremely likely that even during the weekend we might see lower prices still.
Yes. Oh, we have Michigan in 1 minute. We're going to see what that number is like, but these kind of soft consumer sentiment numbers don't matter that much now. With hard data.
They don't indeed. 86.5 expected, by the way.
Yeah.
Previous one being 86.4.
Yeah.
That's for sentiment. Conditions 90.7 expected.
Yes. And in currencies, again, it's the dollar's kind of chopping. It's a little bit weaker today, but it's still trying to figure out if it's going to continue or not. We had an impulsive move. We're kind of correcting now after the Fed, that was. And I'm with you. I think the dollar will strengthen, but I don't know how long it's going to take before we see higher levels.
But and when that happens, I don't know how long it's going to last. I doubt it's going to last very long. But yeah, we should see more strength in the short term.
Yeah, at the moment, unfortunately, again, I'm finding it very difficult to have a firm view on something, especially in FX. So I'm just sitting in the sidelines.
Not your fault. It's the nature of the markets currently really bad.
And it's one thing that I remember the guy who trained me when I started at Barclays. Very, very established guy, very good trader. He said, one of the worst and most difficult things is to just sit on your hands and do nothing. And I found it very difficult to understand at the time, but
US
I get it.
University of Michigan, 85.5 versus 86.5, having to do with sentiment, 88.6 versus 90.7, having to do with conditions, expectations lower as well. But I mean, it's not like an extreme outlier, because this is anyhow, an index that wouldn't be very likely to produce some volatility, because we've seen a lot more important stuff coming through the markets during the week and previous week. So yeah, I doubt this is going to move anything.
Yeah, I agree. Okay.
So you were saying about the guy that he was telling you that the hardest thing to do is sit on your hands. Yes, I agree.
And it's very difficult. You have to wait for the right setup. You have to be as sure as you can about the trade. Obviously, you have to be disciplined with your stops, number one.
We've said it before, Stelio, and I think it's it's important to stress it frequently. Many people don't realize that this part what you're doing when you're not trading and how frequently you're not trading is the most important part of trading. And the reason is because by forbidding yourself to overtrade or trade things that you don't have like high conviction, in essence, what you do is you reduce substantially your drawdowns and your failed trades.
Yes.
And
yes.
I know that once you teach yourself to do this properly, this isn't printed every month on your P&L record, right?
Yeah.
Because it's just trades that are not taking place. But, it is like super important.
It's like in football or soccer, as they say in the US. A good striker is the one who does all the work without the ball. Gets into the right position, and
Exactly.
then so you do exactly the same. You wait, and then you put yourself in the right position.
Or
to actually...
if you want another soccer analogy, why would you be happy with your offense if it strikes 3 goals every game if your defense concedes 5 of them?
Yeah, exactly.
Right.
Yeah.
So you might have some good successful trades, but if you just can't, keep yourself in check, so you don't go into like a rust, not well thought, low conviction trades, and you end up losing what you make from the good trades, what good does it make at the end of the day?
Exactly. Okay. I don't know. Do we have any questions that we can go through?
Yeah, let's have a look at it. So, I don't have much to say. Just we are at all-time highs in the major equity indices. If we want to have a short-term look, somebody could make the argument. Although I've told you that it's never like a super idea of trying to go counter trend, but I am monitoring, out of curiosity, this ascending wedge here, which currently confluences with the 127% extension of the last pullback in the Nasdaq. So technically speaking, this is a great area for a pullback in the Nasdaq, right? Of course, for a technical bearish development to take place here, at the very least, we need to see a move below like 14,150. So we need like 200 points of downside before we can even start considering like bearish developments happening here. But as I said, from a risk reward perspective, you can make the argument that if you really, really can't help yourself by go counter trend, this is a good area in the Nasdaq, right? Now, as we mentioned earlier, to me, technically speaking, purely, this has nothing to do with my fundamental bias. Ethereum looks like it's breaking down. Bitcoin doesn't look that bad, but it looks close. So basically, if I wanted to short one of the two, I would go with Ethereum, just to make it perfectly clear, right? But it looks to me that both of them are very heavy and both of them are very, very likely to push lower, even during the weekend, because I remind you, these are markets that trade 24/7, literally, right? 365 days, 12 months, every single day, including weekends. So keep that in mind. And sometimes we've seen big moves during weekends. So keep that in mind. Also, as I said, so far this pullback in the dollar looks well behaved to me. So above 91.40 as a first important area of support, and secondarily 91. I would favor another leg higher in the dollar, so an extension of this rebound before we can see the bigger trend reestablish itself and keep moving lower. So in the short term, I remain constructive, but just in the short term, like don't get confused. So we can see like these rebounds that we've seen in the euro, in the Aussie, in the Kiwi, blah blah blah. We can see them like losing momentum and rolling over probably within the next week, I would assume. So keep that in mind. Having to do with crude and natural gas, I mentioned them before in FA.C.E for whoever wasn't there. Crude remains extremely well bid. I said it yesterday again. the fact that we got temporarily rejected from the 161.8% extension doesn't necessarily mean that you should immediately jump on the short side, right? We said we said since time ago that would be an ideal level for crude to find some kind of a high before it produces some proper corrective move lower. That doesn't necessarily mean that it's going to happen, right? I mean, we were looking for that level as an ideal upside target, but just because we reached it, it doesn't mean that we're going to turn bearish without yet having the technical evidence. So, and what would the technical evidence be? Simply put, at the very least, some kind of a, at the very, very least, some kind of a break below, let's say, this trend line support, right? At the very least, as a first step. So until that happens, you have to respect this trend. And if we do slice through the 161.8% fib extension at 74.63, then we have really opened up the multi-year high at 77.07, right? So keep that in mind. I mean, it's not out of the question to get there, right? Natural gas looks very bullish for the reasons we mentioned before. Break above the symmetrical triangle, pullback, back test, higher again, and it seems to be picking up in momentum. RSI is also showing overbought levels, which shows that this is the real deal. It's a real move. So keep that in mind. Gold and silver keep looking very heavy. If you're asking me, so I would expect there is more. Let me redraw. I think we're going to see something like this happening. We might not even make it there, right? Just giving you the general idea, right? And something like this here. So medium to long term, I remain very bullish on these metals, but short term, not. Same thing here with platinum, right? We're seeing this rebound. I think it has a very good chance of temporarily, shortly failing, soon enough failing within the next few days, and then getting another leg lower towards 950 before we can actually resume the uptrend. Palladium as well. We said it since we saw this initial rebound there. We might make it back to 2700, but I would expect that would produce more weakness. And copper, more or less same deal. We said 436, 437 is resistance on the way up. We almost made it to that zone. We might see more weakness towards 385, right? What else? That's it, more or less. So let me go through some of your questions. That crude is unbelievable, says Gorkim. Yeah, it remains extremely well bid. Yields are bouncing, but DXY isn't responding. Yeah, that isn't weird. Yields never mattered, having to do with nominal yields. I mean, real yields is all that matters, right? And many times you might have nominal yields rebounding, but real yields not rebounding, and then you're not going to see a dollar reaction higher. Virgin Galactic got approved by FAA to take retail clients, and the stock just jumped 15%. That's interesting. Michael, can you give me a ticker for it? I'll be more than happy to have a look at it.
I think it's SPCE, space. SPCE, I think.
SPCE. Yes, yeah. Stelio. You're absolutely right. Yeah, that was a very nice technical move. Technically speaking, very much to be expected because we had this short-term pennant here. We're now breaking above, right? Implied target. At the previous high. The implied target is at the previous high, actually, at 62 and change. So there you go. Implied target of this pennant is at the all-time high. And no reason not to be bullish as long as it trades above like 30, 38. Okay. XRT. Huh. Look at this devious short-term attempt of a breakdown, right? Yeah. You know, it's getting a little bit choppy here, but RSI is not confirming anything yet. So if you want to be on the safe side, I would give it a little bit more space on the upside, so we make sure that the same thing that was happening here doesn't happen to the upside. So give it to the spike high at 99.25. We break above that, I think we've started the next leg higher. There is a very good chance we've already done that, by the way, that we've already started the next leg higher, right? Just since it's a Friday, etc., give it a little bit more space to the spike high, which anyhow is to be expected that we would see new highs, right? We had this long-term consolidation after a very strong uptrend. So I think we're breaking higher here. Steve, can you have a look at stock ticker IDEX? Absolutely, IDEX. Ideanomics. Okay, I like the name. It's Greek to begin with. Ideanomics, interesting. Yeah, I might like the name, but this price action, I definitely don't like. Yeah. First of all, this is a stock that is really very sentimentally driven. How do I know that without having any idea about the company? Because we keep seeing these repeated moves. Look at their nature, right? These are very indicative of sentiment driven tickers, right? It doesn't matter what kind of a ticker it is. Of course, it happens more frequently to some equities of like companies that make no money usually, cryptocurrencies clearly. But as you see, we've now passed to a period that we seem to be coiling, but who the hell knows in this case in which direction this is going to spike towards against. Usually so far the spikes have been to the upside, all of them, right? I mean, we have then the opposite, but first we get the spike to the upside. So, you know, very, very conservatively bullish, I would say. But if you want my honest opinion, I would just not trade it here. Right? If I, you know, gun to my head and if I was forced to trade it, I would be long. But, you know, I would rather not do anything with it. What is it, by the way? What the hell is this company, out of curiosity? Stephanie, what do they do? It has it under technology services, information technology services, by the way. Is a global company focused on facilitating the adoption of commercial electric vehicles. Okay, there you go. There you go. Okay, now we know why it's sentiment driven, right? Because the electrical vehicles tag has been for quite some time now the focus of mania investors, right? Yeah. Yeah, okay, now it makes sense. Speaking of mania and electrical vehicles, Tesla might be breaking higher. Keep that in mind. That could also help that company. You know, if Tesla goes again in some kind of a parabolic move higher, which given this breakout with a gap. Yesterday we had a breakout with a gap in this case. if this proves to be a runaway gap, you know, that stock might also be affected positively, I mean. Okay. Anything else, guys, gals, before we call it a weekend? IWM, yeah, the Russell. Sure. Testing resistance as we speak, mate. Testing resistance as we speak. So there we go, at the precipice of a breakout or a rejection. Of course, you know which of the two I favor. You know, you should always favor anything that has to do with the developing trend, right? So, of course, statistically speaking, we should favor the possibility of a breakout. These are the two scenarios. There you go. RSI still not confirming also. You see it, right? But I think that once this breaks higher, we should see the Russell promptly making it to the 251 area. So keep that in mind. Zoom. Yeah. Zoom is doing well for the time being. Has broken out, right? Momentum is not awesome for the time being. Yeah. So there is still some chance that we are in a like broader consolidation here. Keep that in mind. But there is a very good chance we found a low. The way we moved lower, the way we formed the bottom, you know, these look constructive to me. So I favor the probability that we found a low. Anything else? Wicks. Let's see. Seems like it broke out. Let's see how we close the week. We might be breaking out though. Keep that in mind. We might be breaking out. Let's see how we close today. Remind me again on Monday. FVRR. Last time we had a look at it, that's why I've told you how tough it is to predetermine how corrective moves can unfold, right? Last time we had a look at it, we talked about two possibilities over there, right? One of them, a corrective pennant that should lead to new highs. The other one was a head and shoulders formation, which I made it very clear, as I always do. I never favor reversal formations until proven that that's the case, right? Now, I was right on the fact that that was a corrective formation, but as you see, that's why you need more price action to. It was a little bit of a different corrective formation, right? So it was a larger pennant, but we have broken out. And I think it's a very, very high probability that we've seen the low over there. So I think this is a legitimate bullish move we're seeing here. And I wouldn't be surprised if it led to new highs. Short term, you know, we're seeing a little bit of a pullback after getting overbought conditions, but I would assume pullback back towards like 212 should be enough. So it looks good. Lemonade. US economy is in the beginning of a very, very strong recovery. Cascari. Yeah, okay. Yeah. Yeah, I mean, a lot of ridiculous individuals in the Fed, but I think nobody compares to Neil Cascari, honestly. Nobody. He's by far the worst of all of them. He's the most clueless. Or the better actor. You go ahead and choose which of the two. If he's so very certain about the very strong recovery, why don't they just withdraw all the stimulus and let's see how strong of a recovery there is? You know, not 100% sure how to draw this. You see why. But in any case, I think there is a very good chance we found a low here. Keep that in mind. And I think I think bullish above this little area here at 91.5. Could one short pullback in natural gas be expected or not in the near days? Yeah, there is always a possibility of pullbacks. There's no question about it, but let me pull it up again. But I think that as long as we trade above 313, you should be looking higher. 370 is the closest upside target. And after that, above 4. Fetch Kaskari, not surprised by some of the high inflation readings, of course. They're doing everything they can to create it. Says some price increases are likely to be temporary. Yeah, just listen to this statement. Some price increases are likely to be temporary. So in essence, he doesn't even talk down inflation, right? He says something vague but very, very conservative, like some of the price increases might be temporary. Okay, yeah. There is, from ancient history, the vast majority of you have probably heard of Pythia. She was like, she was at Delphi and she was making like predictions for the future, right? So she used to give like prophecies for the future that were stated in a way that you could interpret them both ways, right? Στον πόλεμο θα πας, δεν θα γυρίσεις. And depends on where you put the comma, before or after the. Of course, that's all Greek. It meant like you'll go to war, and the had dual interpretations. Meant like want, or or it was like a connecting word. So depends on where you put the comma, before or after the. It meant like you're going to go to war, but you won't come back, or you're going to go to war, you will come back. So these kind of statements remind me of Pythia's prophecies. I mean, I'm completely clueless, so I'm saying something that it won't be wrong no matter what happens. Because what did he just say? That some of the price increases might be temporary. So even if inflation keeps moving higher, some of these price increases might indeed calm down, some of them. But still, the actual total inflation might be higher, right? So he can, even if that's the scenario, he can even claim victory then. Like I told you that some of the price increases are temporary, some of them were. Okay. Anything else before we call it a weekend? Same to you, Alexander. So have a lovely weekend, everybody. Let's charge up our batteries and let's see what we get starting Monday again. Bye-bye.